بسم الله الرحمن الرحيم والصلاة والسلام على أشرف المرسلين سيدنا محمد النبي الأمي وعلى آله وصحابته أجمعين. النهاردة إن شاء الله تعالى سوف نناقش one of the important chapter in finance under the title Financial Ratios and Financial Performance. The main goal of this chapter is to understand who uses financial ratios and how. Second goal is to use the ratio to analyze a firm liquidity and activity. Number three, discuss the relationship between debt and financial leverage and the ratios used to analyze a firm debt. Number four, use ratio to analyze a firm profitability and its market value. Finally, use a summary of financial ratio and the DuPont system of analysis to perform a complete ratio analysis. This chapter to conduct the financial analysis, actually we are going to depend on key financial statements or key financial reports. أحد أهم التقارير المالية اللي احنا نعتمد عليهم what we call the income statement, قائمة الدخل. What is the income statement actually? The income statements provide a financial summary of a company operating results during a specified period. هذه فترة ممكن تكون 3 شهور بيسموها ساعات quarter, the first quarter or second quarter or third quarter income statement، أو ممكن تعبر عن فترة عادة بتكون سنة a yearly income statement. This income statement it's important because it provides a financial summary of a company's operating result during a specified period. If we would like to have how is the shape of the income statement, for example, this is a hypothetical example of a specific income statement. As you see, this income statement start by sales revenues أي إيرادات. Yes, cost of goods sold تكلفة البضاعة المباعة. This will give us what we call gross profit مجمل الربح minus all types of operating expenses المصاريف التشغيلية such as selling expenses, general and administrative expenses, lease expenses, depreciation expenses, and then we have what we call total operating expense. This total operating expense will be excluded from the gross profit. Then we have what we call operating profits, أرباح تشغيلية. Then we exclude what is called interest expense. The result will be net profit before taxes minus taxes. This will give net profit after taxes صافي الربح بعد خصم الضرائب. Sometimes it's called income statement قائمة الدخل. Sometimes it's called net income صافي الدخل. This net income, what we should do with the net income. First of all, if the firm is issued preferred stocks, this means that we are obliged to pay dividends for preferred stocks. So we subtract preferred stock dividends. This will give us what we call the earning available for common stockholders. Based on the decision of the board of directors, whether we should distribute dividends for the common stockholders or not. If the board of directors decided to pay dividends for common stockholders, this means part of it will be used as a dividends for common stockholders, so the remaining part will be kept as a retained earnings. But the net income, part of it, based on the decision of the board of directors, صافي الدخل أو صافي الربح بعد خصم أي ضرائب والفوائد، هذا الربح جزء منه سوف يستخدم كتوزيعات أرباح بحملة أسهم عادية، والباقي will be retained، سوف يتم الاحتفاظ به as a retained earning. Second important financial statement or financial report is the balance sheet. What is the balance sheet actually? The balance sheet, it presents summary of the firm financial position at a given point in time. It just reflect the financial position of the firm at a given point in time. Not before, not after. يبقى بتعبر عن الموقف المالي للشركة عند نقطة معينة في الزمن، ليس قبلها وليس بعدها. As we know from accounting that the balance sheet has what we call the balance sheet identity، معادلة الميزانية. That equals total assets must equal total liability plus owner equity. This is an example of the balance sheet of a specific firm. First of all, we start by the left hand side, which reflects the total assets. The total assets can be divided into current assets or short-term assets and then fixed assets. Current assets or short-term assets, it's referred to the asset with a maturity less than 1 year. يعني أي أصل قيمته أو العمر بتاعه أقل من سنة بوصفه إنه short-term assets or current assets. أي asset عمره أو أجله بيتجاوز السنة بنوصفه إنه long-term assets or sometimes fixed assets. Example for current assets such as cash النقدية, marketable securities, account receivable, inventory. Some of those reflects what we call current assets. For fixed assets such as land and building, machinery and equipment, furniture and fixtures, vehicle, we must subtract what we call the accumulated depreciation. The result or the outcome will be net fixed asset. But net fixed asset, it's equal to fixed asset minus the accumulated depreciation. The total of current assets and net fixed asset, this will reflect what we call total asset. As we know from the accounting that total assets must equal to total liability plus owner equity. So let us start by the right hand side of the balance sheet, which reflect both of total liability and owner equity. As you see, total liability could be divided, the total liability could be divided into current liability, or sometimes called short-term liability, when the maturity of the liability is less than 1 year. But anything related to the liability less than 1 year, it will be called short-term liability or current liability. If it exceeds 1 year, it will be considered long-term liability. The sum of total current liability and long-term debt, this will give us what we call total liability. Examples for total current liability, such as accounts payable, notes payable, accruals, sum of current plus long-term debt, this will give us a total liability. Regarding total equity, حق الملكية, we have what we call preferred stocks, we have common stocks, we have paid in capital, and we have retained earnings. The sum of preferred stocks, sum of common stocks, paid in capital, retained earnings, this will give us what we call total stockholder equity. So the total equity plus the total liability, this must equal total assets. Also, one of the important financial statement, or what we call financial reports, it is the statement of retained earnings. قائمة الأرباح المحتجزة. This statement reconciles the net income earned during a given year and any cash dividends paid with the change in retained earnings between the start and the end of that year. This is called a retained earnings. It reflects how is the situation regarding the retained earnings at the beginning of the year, whether there is payment regarding dividends or not, and how is the situation regarding the retained earnings at the end of the year. For instance, as being said, this is a hypothetical example of a specific firm regarding its retained earnings statement. First of all, it reflects بتعبر how is the retained earnings balance رصيد الأرباح المحتجزة at the beginning of the year. For example, here at the 1st of January 2012, in this example, it equals to 1,012. Then it will reflect how is the profits achieved in this year, so plus net profit after taxes, صافي الدخل بعد خصم الضرائب for 2012. Then we subtract any type of cash dividends. Either it is in the shape of dividends for preferred stocks or dividends for common stocks. Any type of dividends must be subtracted from the retained earnings balance at the beginning of the year and the net profit after taxes. The remaining part, after we subtract these dividends, this will give us the balance, the retained earnings balance at the end of the year. So as you see here, this is the retained earnings at the beginning of the year plus net profit after taxes. We subtract transact any type of dividends, either dividends for preferred stocks and dividends for the common stocks. The remaining part, so 1,012 plus 231 minus 108, this will give us our balance of the retained earnings, which is 1135. The previous part, those financial statements are very important for calculating the financial ratio. Let us now start by financial ratio. When I'm using the financial ratios, what types of parties are interested in? From its name, ratio, we are using data and information existed in different types of financial statement, and we are aiming to calculate a specific ratio. By monitoring and interpreting عن طريق رقابة هذه النسبة, and by analyzing this ratio وتحليل هذه النسبة, we will be able to assess and monitor the firm performance. وهذا هو جوهر التحليل المالي باستخدام النسب. إن أنا بحسب نسبة، هذه النسبة بيتم تقديرها من financial reports، ومن خلال متابعة هذه النسبة وتحليلها أقدر أعمل تقييم لأداء. In this part, we would like to understand what are the interested parties in these types of ratio. Actually, from different perspectives, we could have different parties. For example, from the perspective of current and prospective shareholders. من وجهة نظر المساهم الحالي أو المساهم المتوقع، الشخص اللي هيشتري في هذه الشركة أو الشخص اللي هو مستثمر في هذه الشركة. Those people are interested in the firm current and future level of risk and return. But everyone who is holding the share of this firm or he is going to buy the share, هيستثمر في هذه الشركة، هو بيهتم بمستوى العائد والمخاطرة, which directly affect share price, سعر السهم. طبعا of course أنا كمساهم عاوز أعرف العائد ودرجة المخاطرة، لأن هذه عناصر بتأثر في السعر السوقي للسهم. يبقى أول منتفع أو أول مهتم بالتحليل المالي هو المساهم الحالي أو المساهم المستقبلي. The second party which is interested in financial ratio are creditors الدائنين. الدائن he is interested in short-term liquidity. هو بيهتم بمستوى السيولة في أجل القصير. And he would like to know whether the firm is able to pay its interest and the principal or not. Of course. يعني أنا كدائن أهم ما يعنيني هو short term liquidity، السيولة على الأجل القصير. وهل هذه الشركة قادرة على سداد القرض وقادرة على سداد أصل الدين والفايدة، أم أن هذه الشركة غير قادرة؟ يبقى ده أحد جوانب التحليل المالي. يبقى one of the famous the most important part in financial analysis is to assess the short-term liquidity by the creditor and to determine whether this firm will be able to pay interests and the principal on time or not. The third part is interested in financial ratio is the management. You as a manager, of course, you are concerned with every aspect of the firm financial situation, and you would like to produce the financial ratio. Based on this financial ratio, you are going to assess how is the performance of this firm and whether these ratios are favorable for owners and creditors. Actually, those are different groups which are interested in financial ratio analysis. السؤال بقى how we could conduct the financial ratio. Actually, we have different approaches في عندنا طرق to conduct the financial ratio. The first one, which is very simple, which is cross-sectional analysis. What is the meaning of a cross-sectional analysis? Cross-sectional analysis is the comparison of different firm financial ratio at the same point in time. Yani I'm going to select specific point in time. For example, 2015, 2016, and I'm going to conduct the financial ratio analysis for the firm using the data of 2016 or 2015. Yani you are selecting a specific point in time. This is a cross-sectional analysis. And based on this point in time, you are going to make a comparison between different firms. Yani if we have 5 firms, and I would like to compare between them, first to conduct the cross-sectional analysis, I must select a specific point in time. For example, 2015 or 2016. And then I calculate the ratio based on the data of this year, and then I'm going to make a comparison between different firms based on this ratio. Such a comparison also could be done based on benchmarking. What is the meaning of benchmarking? Benchmarking, it is another type of cross-sectional analysis in which the firm's ratio are compared to the other competitors existed in the industry. This is a benchmarking. Benchmarking, for example, I'm working in a cement sector, and I would like to determine whether my ratio are better than the competitors existed in this industry, so I'm going to select 1 or 2 as a benchmark, and then I calculate my ratio and I compare it with those competitors, and this is called benchmarking. Also, one of the popular technique in cross-sectional analysis is to compare the computed financial ratio ان انا اقارن النسبة المالية المحسوبة in a specific time with the industry average متوسط الصناعة, and this is called cross-sectional analysis. يبقى again, a cross-sectional analysis in a very simple way, you are going to compare between different ratios of different firms based on a specific point in time. Such a comparison could be conducted through the concept of benchmarking, and you are going to see what are the competitors existed in a specific industry, and then you compare your ratio with the ratios of the competitors. Or you could compare your ratio with what we call the industry average. Example for this. Imagine here this is a specific firm in a specific date of time, for example in 2012, and you have the ratio of the inventory turnover, معدل دوران أي مخزون. So معدل دوران المخزون in 2012 of Caldwell manufacturing firm, it's equal to 14.8. ده احنا بنسميه معدل دوران المخزون الشركة. I could compare this number with a industry average. Imagine that the industry average of this ratio it's equal to 9.7. But so a comparison between my ratio 14.8 with 9.7, I could determine whether this is good or this is bad. I would like to attract your attention regarding increasing your ratio or decreasing your ratio. يعني زيادة قيمة النسبة بتاعتك مقارنة بالمنافسين أو مقارنة بمتوسط الصناعة، أو انخفاض النسبة بتاعتك مقارنة بمتوسط الصناعة أو المنافسين. ليس دائما كل زيادة أقدر أعتبره أنه شيء موجب أو أعتبره شيء نيجاتيف، ولكن الزيادة أو النقص بيحدد موقفها إذا ما كانت موجبة أو سالبة، يعني إيجابية أو نيجاتيف، بناء على meaning of the ratio. عشان كده please attract and give your full attention when we studying the ratios for the meaning of the ratio. For example, here the inventory turnover معدل دوران مخزون لما يزيد is this good or bad؟ يعني مثلا نفترض this year the inventory turnover is 10. Next year the inventory turnover معدل دوران مخزون is 15. Is this good or bad؟ معدل دوران المخزون means the ability of the firm of getting rid of the inventory. يعني it measure a speed of selling my inventory. Of course, increasing this ratio could be a good signal regarding the efficiency of our sales department. So in this case, we could argue if our ratio is 15 and the industry average is 10, so this means that this ratio, it's a good indicator. It's a good indicator. ده شيء مهم جدا جدا. Also, in a comparison between the ratio, I could compare a ratio over time. And in this case, it will be considered a time series analysis. But the main difference between cross-sectional analysis and the time series analysis is regarding the time. If your comparison is based on a specific point in time, this will be considered cross-sectional analysis. But if your comparison, it will be conducted over time and عبر فترة من الزمن, this will be considered time series analysis. يعني حضرتك you are going to compare between 2014, 2015, 2016, 2017, يعني over a specific period of time. يبقى in this case it will be considered time series analysis, تحليل السلسلة الزمنية. If someone is asking me which one is the best, إن أنا أعتمد على تحليل عند نقطة في الزمن اللي احنا بنسميه cross sectional analysis، ولا أنا أعتمد على تحليل السلسلة الزمنية اللي هو time series analysis. They found that the most informative approach, يعني أفضل الطرق, is to combine between cross-sectional analysis and time series analysis. And when you compare, and if you would like to get a whole picture regarding the performance of your firm, and in this case it's better to combine between cross-sectional analysis and time series analysis, and this is appeared in figure 3.1. In figure 3.1, this it's a reflection of a combined analysis where we combine cross-sectional with time series analysis for a specific ratio. As you see, we have 2009, 2010, 2011, 2012, and at the same time we compare between the industry and a period at a specific point in time, but this is a combined analysis between cross-sectional and time series analysis. When we are going to determine the financial ratio analysis, there are some cautions about using a ratio analysis. Yeah, there is some conditions, cautions that must be considered when I'm using the financial ratio. Number one, the ratio that reveal large deviation from the normal merely indicates the possibility of a problem. Yani if you find a ratio and when we compare it with other ratio or based on benchmarking or based on the industry average, you found a large deviation. There is a big gap as a result of such a comparison. In this case, we are facing a problem in this area, and we must be careful about this. Based on one ratio, it's not enough. Yani using a single ratio, it's not enough because it didn't provide sufficient information for judging the overall performance of the firm. Therefore, when you are using the financial ratio, you must use different types of financial ratios to get the whole picture regarding the performance of your firm. Also, when you make a comparison between the financial ratio, such a comparison must be based on financial statements dated at the same point in time. And for example, I compare between firm X and firm Y. When you are going to make a comparison, the financial statements of X and Y should reflect the same point in time. Yani this is the income statement of X in 2012, but this is the income statement of Y in 2012. If this is a balance sheet of X in 2012, but this must be the balance sheet of Y in 2012. It's not logic to compare, for example, income statement or financial ratio based on the income statement in 2012 with of a specific firm with the financial ratio based on the financial statement in 2013. This is not logic, and it will make a lot of confusion regarding the performance of each one of them. So when you are going to make a comparison, the used financial statements must be dated at the same point in time during the year. يعني ما ينفعش اجيب financial ratio لشركه معتمده على تقارير 2010 اقارنها مع financial ratio لشركه في 2011. It's not logic. هنقارن 2010 يبقى لازم at the same time 2010 للشركه الاخرى. أيضا when we are going to use the financial statement, one of the caution, it's preferable to use the audited financial statement. يعني لازم التقارير المستخدمة تكون تم مراجعتها، ويفضل من مراجع خارجي معتمد. طب ايه؟ to reflect a high level of transparency and disclosure. يبقى it's preferable to use audited financial statement. Number 5, when you are going to use the financial data for a comparison, such a type of data should be developed in the same way. يعني طريقة الحساب بتكون واحدة لمعلومات اللي حضرتك هتستخدمها في حساب أي financial ratio. Also, the inflation rate, it will have a negative impact on this ratio, so the results can be distorted by inflation, and you must take this in your consideration. But after we finish this part, now you understand what is the meaning of the financial ratio, what are the cautions about using a financial ratio. You now understand different approaches for a comparison based on financial ratio. Either we depend on cross-sectional analysis, or we are using time series analysis, or we are using a combined approach between cross-sectional and the time series analysis. Now we are going to discuss different types of financial ratio using our example based on the attached financial statements report and financial report existed in these slides. The first group of financial ratio, it's called the ratio interested to assess and to measure the liquidity السيولة, especially over a short term. But if you are interested to measure short-term liquidity position in a specific firm, we are going to use the following ratio. The first ratio, it's called current ratio. Current ratio احنا بنسميها بالعربي نسبة السيولة، هو current ratio. A current ratio it's equal to بجيبها ازاي؟ هي عبارة equal to current assets divided by current liability. يعني الأصول المتداولة نقسمها على الخصوم المتداولة. يبقى current ratio it's equal to current assets divided by a current liability. If you go to the balance sheet of this company attached in these slides, you will find the current assets is 1,223,000. The current liabilities are 620,000. So the result of the outcome is 1.97. What does it mean? 1.97 means that the current assets of these firms are enough to cover its current liability about 1.97 times. And this means that the current liquidity of this firm is enough to cover its current liability 1.97. A current or short-term liquidity is very important for small firms. In large firm, because they have a good relationship with the banks, so they have a good link with these banks that enables them to get the credit when they are in need for such a type of credit. But the problem will be for small firms. So this indicator of the short-term liquidity is very important, and they should have more liquidity. If someone is asking me, this number, 1.97, how do you find it? Is it good or bad? To answer such a question, this number alone is nothing. يعني هذا الرقم وحده كقيمة مطلقة لا شيء. It just reflects how the ability of your firm using its current asset to cover the current liability. But its value, 1.97, is nothing. It didn't reflect whether this is good or bad. To answer such a question, عشان نجاوب على هذا السؤال, you need to compare this number with number existed in other competitors, for example. So you need a benchmark. Through a comparison with a benchmark, you will be able to determine whether this is good or bad. يعني مثلا على سبيل المثال لو عندك منافس جيت تحسب له a current ratio اللي هو current assets divided by current liability, you found it is 5. And in your firm it is equal to 2. معناها liquidity in your firm is smaller than the liquidity existed in the competitors, and this is not good. It's a bad indicator regarding the liquidity of your firm. But if you found that the liquidity of your firm is 2 and the other competitors is almost 2, معناها you are keeping the same liquidity what existed in the competitors, so it's okay or is satisfied. Or you could compare this number with the industry average, and through the comparison with the industry average, you could also determine whether this is good or bad. But as I told you, in general, keeping or holding enough liquidity is so important for small firms rather than for large firms. But as you see in the previous equation, current assets divided by current liability. In the current asset, it includes inventory. And as you know, transferring inventory into cash, it will require a lot of time to be converted into cash. Therefore, most of people, they prefer another type of ratio for measuring liquidity over a short term, which is called quick ratio. What is a quick ratio? In this ratio, we are excluding the inventory of the current assets. So this is equal to current assets minus inventory divided by current liabilities. In our example, we determine the current assets from the balance sheet minus the inventory, and we divide it by current liabilities. This is equal to 1.51. As you see, a current ratio, it was 1.97. After re-excluding the inventory in the quick ratio, نسبة السيولة السريعة, it is 1.51. And this is an accurate indicator regarding for the liquidity, and most of people prefer the quick ratio rather than the current ratio in assessing the short-term liquidity. This example, it will explain for you this meaning. For example, here, we have 3 companies, Dell, Home Department, Louise. if give a look for, we have a current ratio, and we calculated a current ratio for each one of those. And at the same time, we calculated the quick ratio. Give a look. If we are only depend on a current ratio in assessing the liquidity of this firm, of course, we are going to have a wrong indicator or a wrong conclusion regarding a current ratio. Regarding liquidity. Why? Because the current ratios are equal for the three firms. So if someone is only based his interpretation on the current ratio, he is going to give a wrong indicator regarding the liquidity of this firm. But after we calculate the quick ratio, you will find that they is the best compared to others firms because the quick ratio level in Dell is 1.2, which is higher than a home department and a US, and this confirm why the quick ratio is more accurate in assessing short-term liquidity compared to other types of ratio. Another group of ratio which is necessary for you is the activity ratios. Activity ratios نسب النشاط. These ratios are aiming to assess the efficiency of utilizing the assets in the firm, and whether the managers are using their assets in an efficient way or not. So if you are interested to assess the activity or the efficiency level of using your asset, you must calculate what we call the activity ratios. The first one, it's called inventory turnover. Inventory turnover, it's equal to cost of goods sold divided by inventory. Cost of goods sold from the income statement, inventory from the balance sheet. In our example, cost of goods sold divided by the inventory is equal to 7.2. As we explained before, this number itself is nothing. It will not give you any hint. To get a good interpretation, you must compare it either with a benchmark or either over time series analysis, or either compared it by the industry average to determine how is the level of the efficiency of using your inventory. If you are interested to convert it into days, in this case, we could calculate what we call average age of inventory. Average age of inventory متوسط عمر المخزون بيساوي 365. 365, this is the number of days per year. عدد الأيام في السنة 365 يوم divided by inventory turnover. We just calculated, احنا لسه حاسبينه، هو معدل دوران المخزون. يبقى this means that average age of inventory متوسط عمر المخزون بالأيام بيساوي 365 divided by 7.2. This will give you 50.7 days. What does it mean? This means that in this firm, في هذه الشركة, they are able to get rid of inventory in almost 51 days. إن هذه الشركة قادرة على تصريف مخزونها كل 51 يوم تقريبا. يعني الشركة دي بتصرف مخزونها كل 51 يوم تقريبا. السؤال بقى, is this good or bad? As I told you, you must compare it to determine whether this is good or bad. Another type of activity ratios, it's called average collection period. متوسط فترة التحصيل. متوسط فترة التحصيل هو average collection period. It's equal to account receivable divided by average sales per day. طب account receivable from a balance sheet, average sales per day, it's equal to annual sale divided by 365. As you see in this example, we determine account receivable from the balance sheet, which is equal to 503,000, and then we determine annual sales from the income statement, which is 3,074,000, divide it by number of days per year, 365, so this is equal to 59.7 days, and almost 60 days. What does it mean? ده مهم. معناها ان this firm almost is collecting its account receivable in 60 days. الشركة دي بتجمع account receivable بتحصله in 60 days. Question, is this good or bad? You need to compare it with benchmark or time series. The third type of ratio, it's called average payment period. Average payment period متوسط فترة السداد. طب متوسط فترة السداد دي how we determine it? It's equal to accounts payable divided by average purchase per day. Accounts payable from the balance sheet divided it by average purchase per day, which is equal annual purchase divided by 365. So in the exercise, they should give you how is the annual, what is the size and what is the value of the annual purchase. By getting the information, if we assume that the annual purchase is equal 70% of its cost goods of sold, حوالي 70% من تكلفة البضاعة المباعة, this is the annual purchase. Here we divide this, so this will give us 95.4 days. معناها إن almost every 96 days, كل 96 يوم, this firm is going to pay its debt or to pay its accounts payable. Whether this is good or bad, we also need to compare it with industry average or benchmarking or using the time series analysis. Another ratio related to the activity ratio, it's called total asset turnover, معدل دوران الأصول. Total asset turnover, it's equal to sales أي مبيعات divided by total assets. In our example, by dividing sales by total asset, we found it is 0.85. What does it mean? It means that for every $1 invested in our asset, it will participate in an amount of 0.85 as sales. But again, 0.85, what does it mean? It means that for every $1 invested in our total asset, it will generate 0.85 as sales, and this is the activity ratio. As you see, in the activity ratio, we could measure the activity by either total asset turnover, or through average payment period, or through average collection period, or through average age of inventory, or through inventory turnover. This will reflect how is the efficiency of utilizing or using our assets. Another category of the financial ratios, تصنيف الثالث, is mainly concerned with the debt situation existed in our firm, and in this case it will be known as debt ratio نسب المديونية. One of the very famous ratio related to this section, it's called debt ratio, which is equal to total liabilities divided by total assets. In our example, total liability إجمالي الديون divided by total assets, it will give us about 45.7%. What does it mean? It means that in this firm we using the debt in an amount of 5.7% for financing our total assets. Or 5.7% of our asset is financed by the debt. This means the rest is financed by equity. This ratio, it's important. It reflects how the firm is using the debt to finance their asset. So the residual of this ratio, مكمل هذه ratio, it will reflect how is the equity in this firm and how the firm is using equity to finance their asset. Another type of ratio, it's called times interest earned ratio. Times interest earned ratio. The time interest earned ratio, we could determine it as it's equal to EBIT, earnings before interests and taxes, divided by interests. In this example, the EBIT, earnings before interest and taxes, it's 418,000, divided by the amount of interests is 93,000. It's equal to 4.5. What does it mean? It means that the EBIT is enough to cover our interests in an amount of 4.5 times. يعني ان صافي الربح قبل اي فوائد والضرائب في هذه الشركه اي محقق بيكون كافي لتغطيه اي فوائد تقريبا 4.5 مره. ده معناه تاني يبقى times interest earned ratio اللي بيساوي 4.5، معناها ان صافي الربح قبل أي فوائد وقبل الضرائب في هذه الشركة بيكون كافي لتغطية الانترستس أي فايدة تقريبا 4.5 مرة. The third type of debt ratio, it's called fixed payment coverage ratio. نسبة أو معدل تغطية الأعباء الثابتة. طب ازاي نحسب معدل تغطية الأعباء الثابتة؟ هو fixed payment coverage ratio. It's equal to the earnings before interests and the taxes, EBIT, plus the lease payment divided by the interests plus lease payment plus the result of a principal payment plus preferred stock dividends multiplied by 1 divided by 1 minus by 1 minus t يعني in this equation you take the sum of principal payment plus preferred stock dividends, you multiply it by 1 divided by 1 minus t. What is t? T here is the tax rate, معدل الضريبة. In our example, earnings before interests and taxes 418,000, the lease payment is 35,000, then في مقام interest is 93,000, plus 3,500 plus a principal payment 7,100 plus preferred stock dividends توزيعات الأسهم الممتازة. You took the sum of 17,000 plus 10,000 multiply it by 1 divided by 1 minus T, which is the tax rate. This will equal to 1.9. What is the meaning of 1.9? This is the most important. This means that the earnings before interest and taxes صافي الربح قبل الفائدة والضريبة مضافا إليه yeast payment قادر على تغطية الأعباء الثابتة حوالي مرتين تقريبا 2 times. The fourth group of the ratio analysis, it's called profitability ratios. It's called profitability ratio. نسب الربحية. Profitability is very important because it's important for the investor, important for the creditors, important for manager. To assess the profitability position of this firm, we have sub-ratios. The first one is gross profit margin. Gross profit margin is equal to مجمل أو هامش مجمل الربح هامش مجمل الربح. How could we determine it? Is equal to بيساوي sales minus cost of goods sold, which is give you gross profit. مجمل الربح, we refer it as a percentage to sales. In our example, for instance, here it says 3,074,000 minus 2,088,000 divided by sales. This will give you 32.1%. What does it mean? يعني ايه؟ اما اجي اقول لك مثلا if you know that the gross profit margin it's equal to 32.1%. It means that for every $1 created as sales, our gross profit in this $1 is equal to 32 cent. يعني for example here يبقى 32.1%. It means for every dollar created by sales, our gross profit equals 32 cent. Also, we could determine the operating profit margin, هامش الربح التشغيلي. It's equal to operating profits divided by sales. In this example here, our operating profits from the income statement is 18,000 divided by 3,074,000. This is equal to 13.6%. What does it mean? ده معناه ايه؟ معناه for every dollar created in sales, our operating profit equals 13.6 cents in each dollar created in sales. The same situation, net profit margin, هامش الربح الصافي, it's equal to earnings available for common stockholders divided by sales. It's equal to 7.2%. What does it mean? It means that for every dollar created in sales, our profit, our net profit equals 7.2 cent. Also, one of the important ratio created by the profitability ratio, it's called return on assets. Return on asset معدل عائد على الأصول. How could we calculate it? Return on asset ROA is equal to earnings available for common stockholders divided by total assets. In this example, we found it is equal to 61%. What does it mean? And if someone is asking you what is the meaning of the return on total assets, which is equal to 6.1%, it means that for each dollar invested in this in the assets of this firm, it will create 6.1 cent as net income for common stockholders. This is the meaning of 6.1%. And for every dollar invested in the total asset of this firm, it will create 6.1% as a net profit for the common stockholders. The same situation if I'm interested to know what is the return on equity, ROE. ROE, return on equity, معدل العائد على حق الملكية. Return on equity, معدل العائد على حق الملكية بيساوي equals earnings available for common stockholders divided by a equity, which is common stock equity. In this case, this is earnings available for common stockholders divided by equity. It's equal to 12.6%. What does it mean? It means that for each $1 existed in a shape of common stock equity, it will generate 12.6% or 12.6 cents as earnings available for common stock holders. The last group in our financial ratio, it's related to the market. If you are interested to assess how is the marketability of this firm in a market، ايه موقف الشركة ده في السوق من حيث الأداء السوقي للسهم في السوق. This could be assessed by sub-ratios عن طريق مجموعة من النسب الفرعية. One of them is called price earnings, PE ratio. PE ratio, it's equal to market price per share of the common stock, سعر السوقي للسهم divided by the earnings per share، عائد أو ربحية السهم. In our example, the market price at the end of 2012, it was 32.25 divided by the earning per share 2.90, it's equal to 11.1. Also another ratio, it's called market ratio. Market ratio, it's a relation between a market price to a book price ratio. يعني equal to market price per share divided by book value per share. The market price, it's easy to get it. Just you give a look for the price of the share in the market, especially if it is listed in the stock market. Give a look for the closing price, and you take the adjusted closing price. This is the market price per share. The problem is how we determine the book value per share. The book value per share is equal to common stock equity divided by number of shares outstanding. The number of shares of common stock outstanding, this will give you the book value per share, and this is one of the ratio that could be used in assessing the marketability in the market. So as you see, a market price is 32.25. We divide it by a book value per share of the common stock, and this will give you 1.40. As you see, if it is more than 1, this means that the market price is higher than a book value, so it's profitable. But if it is less than 1, it means that the market price is less than the book value. It means that you are a loser, and there's a problem in this firm because its market price is less than its book value. After finishing the calculation of this ratio for each category, you must try to summarize this ratio in a table that could help you to reach a general conclusion regarding the financial performance of this firm. As you see here, we design this table in this way. First, we started by a ratio. We started by the first classification of this ratio, which is the liquidity. We have two basic types of this ratio. We have current ratio and we have quick ratio. Then we write down the formula, how we calculate each one of them. Current ratio is equal to current assets divided by current liability. Then we calculate it over, for example here, this is 2010, 2011, 2012, and over a number of years. Then we set the industry average, and then we make a conclusion. If we basing our conclusion on a cross-sectional, and if we based on a specific point in time, or if we are using a time series, then we set our conclusion. So as you see, for example here, if we are basing on the industry average, it's almost, there's no significant difference, so it's okay. But also based on a time series, also you found that there is insignificant difference between years, so it's okay. But regarding a quick ratio, you note plausible increase from 2010 to 2012, so it's acceptable compared to industry average, but over time series is improving from 1 year to another year, so the overall assessment is good and so on. As you see, first we start with the first category, writing down a sub-dimension of this category. We calculate this ratio over a number of years, and through a comparison based on benchmarking or time series, we could reach to a specific conclusion, and so on for each type of this category. Thank you. Wishing for you all of the best, and see you face to face in our lecture. Thanks.